Welcome to the TRADER24 studios for your daily financial update on the global markets. With Wall Street hitting 7-week highs at a point in time when this can only be justified by discounting, investor uncertainty has peaked. Add to this huge problem the crisis in the energy and agricultural commodity markets and the very high risk premium that investors require to take on the also high risk of backing equity securities. If we accept that Wall Street is anticipating some normalization coming from the Fed and the easing of aggressive interventions, there is a significant mismatch in these expectations, as the Fed is not aiming at interest rate gains but at a partial unlocking of the positions in favor of the upside to cool the overheated economy. Therefore, investors either see an immediate solution to inflation or turn a deaf ear to the coming mini-crisis on the aggregate demand side. The US, apart from now officially having a benchmark interest rate of 2.25% to 2.50% after the second consecutive record increase of 75 basis points, is also in recession, at least at a technical level. This is because recession is defined when an economy records a second consecutive quarterly decline in GDP growth, as happened last week. The problem of the recessionary vice is justified by the fact that expectations for recovery in the next 2 quarters of 2022 are minimal, at least according to both the international firms, with their damning reports, and the IMF, which the other day brought the figure of 3.2% after revising the already reduced 3.6% in global economic growth, with the Chinese economy taking the biggest jolt at 3.3% instead of 4.4%. The dollar remains around 20-year highs with a persistent appreciation of recent months. Commodities continue with dangerously high energy costs and plummeting agricultural commodities in the shadow of an endless war. The freight market remains depressed, reflecting the possibility of a slowdown in economic growth, and the government bond market is trying to find its footing in a context of investment uncertainty. You are watching the TRADER24 Daily Global Market Overview. Let's take a closer look at the situation. On Wall Street, buyers continued their party with the major indices moving higher throughout the session on Friday, while high trading activity and closing at the highs of the day also added points of optimism. S&P 500, Nasdaq closed with gains of over 1.5%, and the industrial Dow Jones at plus 1%, the New York Stock Exchange at plus 0.85%, and steadily above the 15,000 points that had been around for 6 weeks, while the small cap Russell 2000 was at plus 0.65%. The VIX risk index gave mixed signals as it remained unchanged. All S&P sectors closed positive, with the exception of a misstep in healthcare with a minus 0.35% and consumer discretionary with a minus 0.72%, with energy at plus 4.51%, recording the biggest positive signs, with Chevron at plus 8.90% and its excellent second quarter financial results playing a huge role. The main positive protagonists in the large cap next to Chevron were Amazon with a plus 10.36% and Weight Watchers with a plus 8.30%, while in the small cap, AHT with a plus 24.93% and Sonder with a plus 23%, while among the technology companies, only 27 out of 102 of the Nasdaq saw a negative sign, with a spotlight on Intel's minus 8.56%. Similarly, in the industrial Dow Jones, just 6 of 30 closed in negative territory, while in the pre-market now, most listed companies are moving in negative direction, with the Chicago futures giving a bearish opening. And despite the unexpected optimism on Wall Street with its GDP shrinking for the second consecutive quarter, the Hang Seng closed unchanged, with the Chinese likely to have parsed both the recessionary wave in the US and the IMF's gloomy report, which revised down the country's expected economic growth rate to 3.3% instead of 4.4%. At the same time, sentiment was weighed down by the release of the domestic PMI, which saw a decline for the 4th consecutive quarter, foreshadowing the worst. In other respects, bullish sentiment prevailed. Japan's Nikkei saw gains of 0.69%, the Topix also gained 0.50%, and the Australian 200 continue at month highs with new gains of 0.20%. European markets are following the pace of Wall Street, with investors turning a deaf ear to the poor macroeconomic data of the now inflated Eurozone, while the critical Italian political issue opened by Mario Draghi's resignation remains open. The biggest gains are currently seen in Essilor's shares at plus 2.75%, while Vonovia at minus 1.50% and Philips at minus 1.24% are underperforming. In Athens Stock Exchange, Greece is moving optimistically at plus 0.80% in general and 25 large cap indices, with the banking sector at plus 2.53%, while turnover remains extremely low for another session. For now, after the break of 845 as the medium-term resistance, the way is now open towards 870. The easing of investment fears has brought buying interest in U.S. bonds, with the U.S. Treasuries seeing a further decline in yields at the 10-year maturity to 2.64% and a 6-month low. The 30-year is in the 3% zone, with a spread between them widening dangerously, reflecting high implied volatility. The 2-year remained 22 basis points higher than the 10-year, while in Europe the German bond yield was depressed to 0.82%, with the spread of the Greek at 212 basis points, the Treasury at 184 basis points, and the gilt at 104 basis points. In the forex market, the pound and yen continued to be strong against all others at a time when the mighty US dollar seems to be stalling its month-long rally, and the dollar DX index remains close to 106 and the last supports, while the exchange rate against the euro remains in the region of 1.02. The pound approached $1.22, the yen maintained 132 per dollar, the Canadian dollar held above $0.78 at June levels, the Swiss franc remained at $1.05, while the Australian dollar strengthened to $0.70. New worrying data in the energy equation came from China, whose government announced a new downturn in industrial activity, so that demand from the largest oil importer is tending to shrink, inviting the recessionary plague. After all, the CEOs of the two oil giants Shell and Total Energies already gave a strong message to the commodity markets last week that normalization seems a distant scenario. This is because, according to the company's data, demand has not yet fully recovered, far from the pre-pandemic levels, while the stingy supply from oil producers is a burden. While in this sense, all eyes are on the upcoming OPEC Plus announcements, although expectations for production growth are poor, since on the one hand crude inventories have already been announced, which have fallen by 4.5 million barrels, and on the other, Biden came back empty-handed from his recent visit to the Middle East. In addition, the sudden wide divergence between Brent and crude has now condensed, with Brent now at just plus $6 per barrel at normal levels, giving a $4 per barrel gift to hedgers. Crude cannot get back above 100. At the same time, Brent lost momentum, moving back to 103, while gasoline lost 11.51%, trading at $3.09 per gallon. The general GNX index lost 1.29%, mainly weighed down by the collapse of individual gas indices, with SG5 down minus 4.57% and SG8 down minus 3.62%. The TTF now trades below 200 euros per million thermal units, while Henry Hub also lost $8 to a one-week low of $7.93 per megawatt hour. Gold and silver held on to last week's gains, with silver holding at $20 per ounce. And in agribusiness, cotton saw $1 per pound, with SG3 losing 2%, wheat overtook $8 per bushel, and soybeans remained near 8-month lows at $16.2 per bushel. Finally, in the freight market, the Baltic closed negative for the 5th consecutive day, with a cumulative monthly loss of 15.4%, and the 3rd consecutive down month, ahead of the risk of a severe recession in the coming period, with all individual indices, Capesize, Panamax, and Supramax, showing a weak behavior. In terms of economic announcements, today the results for the German manufacturing PMI were released at the 49.3 level, in line with forecasts, while later in the day we expect the results of the same index in the UK and the US. On Friday, we had the results for the core U.S. Personal Consumption Expenditure Price Index, which came in at 0.6% or 0.1% above forecasts. In terms of corporate announcements, today we expect the financial results of Activision Blizzard with projected earnings per share of $0.4761 and revenue of $1.57 billion, and Devon Energy with projected earnings per share of $2.31 and revenue of $4.09 billion. On Friday, financial results were announced by ExxonMobil with earnings per share of $4.14 and revenue of $115.68 billion, both above forecasts. Chevron with earnings per share of $5.82 and revenue of $68.76 billion, both above forecasts, and AstraZeneca with projected earnings per share of $0.86 and revenues of $10.77 billion, both above forecasts. After last week's announcement of a 0.75% interest rate hike by the Fed and a 0.9% drop in the US GDP, the crypto market seemed to bet on riskier products, which continued their rise over the weekend. More specifically, Bitcoin continued to trade steadily above the $24,000 level, reaching $24,600 yesterday afternoon. Since dawn, however, it has begun a slight downtrend of 2.52%, which has brought it close to $23,200. The second largest cryptocurrency, Ethereum, seems to be holding steady in the area of $1,700 with a 24-hour high of $1,752. It is worth noting that Ethereum has gained over 55% since the beginning of July. The large cap altcoins are seeing a downward trend, with some of last week's big gainers such as Optimism, Ethereum Classic, and Uniswap down minus 4.80%, minus 9.57%, and minus 6.71% respectively. Exceptions are Polkadot with a plus 6.86%, ApeCoin with a plus 1.13%, and Filecoin with a plus 21.74%, as well as some other smaller altcoins. In other news, the Brazilian branch of Spanish banking giant Santander will begin offering crypto transactions as well as large capital raises from various projects with the help of FTX Ventures, the venture capital subsidiary of crypto exchange FTX. Thank you for joining us today. It was the TRADER24 Daily Global Market Overview. Stay tuned for our next comment on the financial markets.